Welcome back to my channel. Today I will be going over how to build your credit score. Before I go into anything, I'll go over why is your credit score important. The reason why your credit score is important is that it will let you get better loans. So here's a very good graphic that I found, and it shows you the difference in interest rates you would have to pay depending on your credit score. If you have an excellent credit score, which is above 740, you would pay about 5% of interest on a car loan on average. And if you have a poor credit score, which is below 550, then you'd be paying almost 19%. So that is paying almost 15% more in interest, and it will cost you thousands of dollars. Then the difference that's even more important than the difference on an auto loan is the difference it makes on your mortgage. If you have a poor credit score and you get a mortgage, you'll have about 10% interest. If you have excellent credit score, you'll have about 4% interest. And this will cost you tens and tens of thousands of dollars because houses are so expensive as it is. As you can see on this graphic, the thing you really want to do is stay above 620 because that keeps you at acceptable credit, which is close to the excellent credit ratings. If you fall below 620, then you go into subprime or poor credit, and that means your interest rates just skyrocket. So now that you know why to care about your credit score, let's go over what it is. So in this graphic, you see it is 35% your payment history. And what that means is, do you pay your bills on time? If you pay all your bills on time and the proper amount, then your payment history will be good. If you miss payments, then your payment history will be bad. Next is the 30% that is under, in this chart, it's called amounts owed. I've seen it as credit utilization pretty frequently. And what this means is how much of your credit are you using right now? So for example, if you have a few credit cards and they add up to a $10,000 credit limit, and you currently owe in between those credit cards $2,000, then you will have 20% credit utilization. And from what I've seen from my own experience and from what I've researched, you want to keep below 30% utilization. So the first two count for 65% of your credit. So that's really the major parts. And now to go into the smaller parts. So at 15% is the length of credit history. And you don't have to be a genius to figure this out. It's pretty simple. It's how long have you had credit. So for example, I've had credit cards for about 3 years, and I don't have any auto loans or student loans or any other type of loans. My length of credit history is about 3 years, and this is seen as fairly short. So this currently brings my credit score down a little bit. And even though it brings my credit score down a little bit, there's nothing I can do about it because it's just the length of time. So all I can do is wait. This is the reason why a lot of 20-year-olds have worse credit scores than the average 40 or 50-year-old. The next one is credit mix, which is 10%, and this is, do you have multiple types of credit? So for example, if you just have one credit card that has all of your balance on it, then you don't have a good credit mix because you just have one type. However, if you have multiple credit cards and you have a different type of loan, you have a mortgage and student loans, then your credit mix would be good. Now, I know what you're thinking. You're thinking, I should go get a lot of new loans to improve my credit mix. And the answer is no. Stop. Don't do that. Don't just get multiple types of loans just for your credit mix, for your credit score. It's only 10% of your credit score. It's not that important, and it is not worth it to get a bunch of new loans just to improve this small portion of your credit score. However, as you have seen in this video that I made a few days ago, you can get a good credit mix by getting multiple credit cards as long as you follow my number one rule with them, which is pay them off in full every month. You won't be hurt by having credit cards. However, if you don't pay them off in full every month, you're going to pay a lot of interest and you won't be following my number one rule. So I'll be disappointed. And the last one is 10% under new credit. Every time you take out credit, they do a credit check on you, and they can see how many credit checks have been done in the past year. And if you have several credit checks in the past year, they'll see it and it will slightly decrease your credit score. However, once the credit check is more than a year away, they no longer look at it, so it is just a short-term dip in your credit score. So how can you improve your credit score? The first way to improve your credit score is by paying off all your bills on time. A second thing you can do is you can apply for higher credit limits. This will make your credit utilization go down. A third thing you can do is look at your credit report and see if there's any bad claims against you. So if like a collection company says you owe money and you don't, you can dispute that and it'll be taken off your credit score and your credit score will go up. Another way you can increase your credit score is by providing your rent payments to the companies that develop your credit scores. So they will see you paying rent every month on time, and they will treat this as you making another payment on time, just as they would if you made your credit card bill payment on time every month. You can also use Experian Boost to do this, which has the commercials that I like with the cow that goes Boost. But what they do is they link your bank accounts to the services that make your credit score, and they prove that you can make payments on time, such as streaming payments. The last thing I'm going to talk about on how to improve your credit score is by increasing your credit mix. So I would do this by occasionally getting a new credit card. And when you get a new credit card, you can even get big cash bonuses. And I made a whole video about how to get $200 a month in cash bonuses from credit cards, and it is right here. So by watching this video, I hope you have learned why your credit score is important, what it's made of, and how to improve it. And if you thought it was a good video, please leave a like. If you would like to see more videos in the personal finance genre, otherwise known as money, then please subscribe. And if you have any ideas for new videos or questions about this specific video, please leave a comment below. Thanks.